analysis. I'm Rocky Outcrop. That's the screen that I use whenever I'm doing the episodes. Just thought I'd show you a little bit of a different angle here before we get started. That's the computer that I'm using. And if you see there, that's a tin of tomatoes and a book. So I'm just going to position you over here behind the tin of tomatoes and in front of the book, just in that perfect position. Ta-da! There we go. Perfect. Right. Okay. So what we're going to do here is we're going to start off in the weekly timeframes and go down towards the lower timeframes, building up a picture along the way as we go of the price action to give us some clues as to where would be the best areas to manage our risk. And wow, the prices are 8,939 right now. Great, groovy. So I'm doing an episode during some volatility on the prices. Excellent. Always love a bit of that jazz. Now, how does that shape up then in terms of the weekly, having just moved this line in the previous episodes? Well, we're just coming outside of it now. Should the weekly price action result in a volume candle down below here, which is actually, higher than the previous ones, I would say, but if it was significant volume candle, just in terms of, this has always been depleting, diminishing in terms of the volume. If it was to be a significant one, then that would be interesting. And yeah, sorry, I just for a second there I thought maybe I stop this, maybe I stop and I dive in and I do a little bit of trading. Well, actually, I can do that. I can talk about right. Look, we've got these price targets on the charts. Okay, let me just bring this on for the fun. We've got these price targets on the charts, and what's that one there? 8,950, significant area, right? And you can't expect if it were to come down to 8,950, perhaps that you might find some sort of bounce in this area, looking back up towards those 9,000 areas again. So if I were to jump off right now, I might be tempted to take a little sort of a scalp trade or something like that, but I don't need to. I'm not giving anybody financial advice or anything because the volatility is happening on camera, and instead I can talk about how we've already had all of this discussed out there, anyway. So if it does go down below 8,950, and in fact, in terms of the weekly time frame and all the rest of it as well, all the time frames really, if it goes down below 88888, then you're looking potentially towards the downside for another move, perhaps down towards even the 8,000 area flat thereafter, where the 382 comes in at about 7,950 actually there for that one, just for instance. So we could, and of course I've got this target here of 8,200 written in this box here already. Anyhow, so exciting times. 8,969. Woo! Let's see how things all pan out. The price action today has been as high as 9,265. So as you can see right now, we're operating $330 down from where the prices were previously, and that makes things exciting. Great stuff, good stuff, excellent stuff. A little reminder to folks, by the way, if you're going to share this video with friends and share the channel with friends, you can go to youtube.com/RockyOutcrop, because we have a custom URL for the channel now, Rocky Outcrop. It's great. You can find us there. Dabby dozy. Now, the video, I'm a wee bit annoyed right now because I made a video before, but I wasn't recording on the camera. So I decided to remake it so that I'd be in the video. It was a really, really good one, though. But that was before the price action dropped down a wee bit. I was talking, hey, the prices could go down to 8,950 and stuff like that. And now they've done that. I don't need to talk about it in the video. But why did the video take so long, you're asking? Why was it such a long one? And why was it so good as well and long? Good and long together? Well, because I talked about the Bollinger Bands and what they are, how you use them, great detail, all sorts of stuff. And we'll do that again in this episode, but we'll do it a bit more briefly instead of what I did before, because, you've only got so much energy. I've got fucking 3 other videos to make today. Excuse my language. 3 other videos to make today, and perhaps a bonus one, although the bonus one maybe won't come. If I do a bonus one, I think it'll be about KNC, Kyber coin. A few people have been asking about that recently. Don't be alarmed. I updated the channel, by the way, yesterday, told everybody that we were moving on to blackcurrant juice instead of the orange juice for this week. So don't be alarmed seeing that different color in the bowl. It's just because you didn't watch yesterday's video. Look at this here, symmetrical triangle. Are we breaking out of it? Who knows? It's volume-wise, let's look towards those areas and go down towards the lower time frames and check in with our other shapedy-wapeties. So moving on up here, as you can see, if this upward sloping trend line here, which offers up the sort of the support towards the downside of this ascending triangle, sees that there's actually an overlapping descending triangle here until such times as the price has actually moved on down below that 8,889 area and on below, then there's not that much cause for concern, he says, famous last words, because that's where the significant area is. This is essentially fake out territory outside of that line, as denoted by this sort of descending triangle. And of course, 8,950 offering up the good area for sort of taking a manageable risk position if you were to be doing that, or indeed a good place to be taking profit if you were shorting it down the way towards here, which you may well have been doing, playing off of the 21 EMA there on that one. The 21 EMA being a little bit more useful to me in my mind than the 20 MA, simple moving average, as seen in the middle of the Bollinger Bands, which is now denoted by this red dotted line, like I say, because I switched them over. Now, if you're interested, so I'll just show you so you can see. Red dotted line 20 and Bollinger Band, put the Bollinger Bands on, median line, basis line, and the Bollinger Band lining up right there with that red dotted line. In fact, if we just make the color of the Bollinger Band median line red, then you will be amazed. My God, look at that, it's amazing. So that's what we're looking at. In general, 21 is what I use in terms of 21 EMA, just if I'm going to be using a small one, but of course the Bollinger Band 20, and you can consider one to be an analog of the other. Over here in the 2-day time frame, anyway, I'm going to run through this sort of keep running through the technical analysis as we watch the prices. Keep an eye on that if you like. See if we move back up towards anything. In terms of the Bollinger Bands, how's this shaping up in terms of the 2 days and whatnot as well? We've come back down to we come down towards the edge here, but the edge is actually at the bottom line of this. So, there'd be a 95% chance that we wouldn't actually move beyond this area today, and instead you'd come back up towards, at least to sort of wick back up to it, or indeed even beyond it, if the prices were to move down here today. So that's lining up with the descending triangle. You might find that interesting. I don't particularly find that super interesting because I, have this line here anyway. But you might like the confluence there down towards the 24-hour time frame, where we have, instead of a descending triangle, we have a descending wedge here, a fallen wedge, which is taking us outside of a rising wedge in the background. So the rising wedge being the sort of the dominant pattern there, but then there's this one which is asking questions. Would we find ourselves, getting a bullish outcome from this descending wedge to take us back into the area of the rising wedge? Battery, extremely low battery, 10% remaining. It never rains, but it pours. Their folder is empty, but I'm still recording. That's good. What I want to do, I want to transfer photos. Okay. Shut up, computer. Right. Okay, cool. So, yeah, that was a big distraction. But anyway, as we can see here, we come down towards the lower end of this Bollinger Band at 24-hour time frame. Chances are blah, blah, blah. Let's go on down the way as well. Overall, this Fibonacci retracement on the right-hand side, you can see we're right in it at the golden pocket again here. Looking at this and saying, is there any sort of lower low or anything on the go? Well, if we zoom out the price action so we can see it a bit clearer, zoom in the price action, then you can see that if the prices were to close below 9,000, looking towards where the last close was here at 9,000, if they were to close, then we'd have a lower low there. Looking here at the, bearing in mind that this low here was the low on the RSI, and here it would be higher on the RSI, and the stochastics and on the DMI is not as high. Now, the way that you use this is obviously you're looking towards to see that this is not obvious at all, but it's sort of, and I'll just give the lesson again, that you're looking always for this to be increasing its highs, because it's the DM minus and positive have been separated out. So, of course, you're looking for it to increase highs to show the increased strength. And so, yeah, of course, this is lower than on the left. So that would be bullishly divergent, bullishly divergent, bullishly divergent across all three of them. Should the prices actually close up below that 9,000 price point in the next 7 hours and 10 minutes. A little bit rich, maybe talking about it like that. So if we go down towards the 4-hour time frame, where does that put in this thing? Well, that's actually 8,950 if you're looking for the previous low. Bringing up the, if you were looking at this low versus this one in terms of the 4 hours, which has got 3 hours and 10 minutes left on it, then you'd maybe find that divergence. Let's just jump on again down towards, say, the 1 hour time frame. 95% chance that you don't spend any time outside of this, that if you come back up and wick up and touch it. So at the very least, I would probably expect within the next hour as well for the prices to come back up and touch 9,000 as they are doing right now, in fact. So that's happening. 9 minutes and 58 seconds left on the hour. Let's see how this goes. In fact, we can keep this episode going throughout the close of this hourly so that we can actually look at this in terms of the Bollinger Bands. Now, why have I got the Bollinger Bands on there? You might be asking, oh, by the way, is this divergent or not then? This low here, no, it's not. I mean, look at that. When was the last time it was as low as that over here? So you're still making the comparison point between the 2 points here. This low and this low. Well, this is actually working out to close higher than it at currently 9,000. There we go. Benefiting from having already planned out all of your potential trade areas. You know, you took your profit perhaps on a short down there at 8950. You're not regretting it now. Maybe you took a little long. Sure, you can move your stop into profit if you want to. Then it's a zero risk trade. There you go. Trading like a Rocky Outcrop is stress-free and easy and successful. Everybody loves it. So anyway, as you can see in the previous times, you know, movements outside of this area are often followed up by then a wick up and touching the Bollinger Band extreme edge, whereupon at which time you can ask the question, will we come back into the area again and trend towards the top side? In which case, maybe we'll move over a period of time, whether that's immediately or over a period of time, towards the median line here of the 20 MA, or we can move back towards the outside again, right? That's kind of a basis of it, and a more important use case for it than what other people use it for. Another important use case for it is to look at this and say, are we hugging the outside edge? Now we trace along here, and as you can see here, we're tracing along here. We came outside of it, 95% chance that you would then not continue to move much further beyond that area before actually coming back up and at least touching the edge of it. That's how I talk about it. Then, of course, then what you're looking for is not to say that it is oversold or overbought. But in fact, to ask the question, will it trace the edge that you're touching? That's the question. That's how you actually use these things if you want to use them successfully like the professionals do, as opposed to using them like the morons do, or indeed the people who learn to trade by reading Investopedia and that sort of thing. So if you look down here and you can see here, this traces this edge. And then while we come back towards the median line, we actually move towards the outside again to maintain that flow towards the outer band and the outer standard deviation away from it. There's more. The questions that are important about the Bollinger Bands are, how far away are we from the 20 MA moving average? How far, what's the distance between us and that? And what is the volatility in the recent price action? You know, how big are the candles compared to the previous ones and whatnot? And what's the price action actually doing in terms of volatility? Because the bands moving away from each other is a measure of the volatility, essentially an analog for it, because all they are is 2 standard deviation points away from the median line, which you can be seen here. So as when the prices, if the median line here, which we can call this red dotted line, okay, so as we know that this is set to the inputs, this is set to 20, which is what the median line is. It's red dotted line, or red. You know, if we zoom on in a bit, then you can see it's actually a smooth line in the background. So this red line here is the 20. So if this moves sideways, then these get tighter together. And as you can see here, during this sideways period, it resulted in them becoming tighter. And then, you know, you can say that the volatility is obviously decreased as a result of the sideways movement on the 20 period moving average. And because obviously this is where it's moving down the way, this is 20 periods back from here. Then we have a bit of sideways, and it results in the sideways movement here, which results in the Bollinger Band squeezing tighter. Okay, so then what's the question then in terms of, you know, every so often I get these massive flashes of, look, Rocky, screw that. Just publish the video that you already made without you being in it. It's a really, really good video. I keep getting them, so I have to combat that in my head. So anyway, as you can see, when the prices, when this moving average goes sideways and doesn't have a slope on it, and when you're looking at moving averages in general, you kind of should be looking towards the slope, the position of the price action away from the moving average, and all of that is a different is the same thing that Mr. John Bollinger here essentially did with his Bollinger Bands. I mean, the reason that these things are so famous versus their actual utility compared to other things out there in the market is disproportionate. But it doesn't, or the reason why, whatever, my sentence doesn't make sense there, but whatever, it's fine, it's fine. As you can see here, the upper side's standard deviation away from this area increases the strength, the movement away, but you can see that happening in terms of the sheer speed of the movement away from the 20 median line here on the early time frame during this period here. So we came outside of it, we came back in, we touched where we just touched it, then we moved and we traced the line down the way, and that's what you want to look to on the Bollinger Bands. Here, moving down the way, what do we do? So just to be clear as well, people normally talk about the Bollinger Bands as like, we've touched one edge, therefore we're going to go back towards the median line. That's what people say. It's entirely wrong. That's not how you use them at all. You do if you're a moron, but you don't make money if you're a moron. So, you know, your choice. But what normally somebody would say is, look, this is how you use the Bollinger Bands, right? The prices came to the median line. They moved up towards the top line. So then what we do now is we expect them to move towards the median line again, and then probably as well go through it and go down towards the bottom line, and then we'll go up towards the median line, and then we'll go up towards the top, at which point we'll be overbought and we'll move towards the median line again. But that, as you can see, actually is a failing system. What you're looking for is to see whether or not it traces along the outside edge of the Bollinger Band. They're maintaining the chances, and there's a 95% chance that it won't actually continue multiple candles outside of the area. So it would probably trace back towards it again if it goes outside of it, as you can see in all of these instances. And then at which point, you're asking the question of, will we move towards this or actually continue to trace up the way? And whenever it's then you can say to yourself, well, look, we're no longer moving towards this area. We're beginning to trace down the way, and the Bollinger Bands have now become thin again and whatever else because we move back towards the 20-minute median average. That thing is over, and you can take profit on your move, etc., etc., as opposed to using them for sort of like saying, hey, we're overbought. Because if you were to only say that once you come up towards the top end, that you find yourself in an overbought or oversold situation, and then you expected it to go towards the downside, there's many instances where you actually miss out. In terms of this one here, you're looking at is that only 3.5%? I suppose it is the early time frame. You're looking at having gone with that wick as well, nearly 5%, 4.5% out of underwater in your position, purely because you thought it would go back towards this line at 9,356, and it doesn't actually do that for a long time, and it spends a bunch of time up there at $9,600, $300 underwater on your position. You'd have probably stopped out. It's clearly not the way that you use these things. It's clearly not what they're about at all. In fact, you're looking to see them tracing along the edges of it, and if it moves outside of the area, to come back in and wick up and touch that line again, as you can see here and here, and as you can see, if we just choose any arbitrary point where it comes outside of it, it didn't actually, similar story there, but it's not what I'm trying to get at. Okay, so here, and then it comes back up and it wicks up and it touches that line again, then it continues towards the downside, and then it comes back up and it wicks up towards this line into the area again, then it continues towards the downside. So there's a 95% chance that it won't have multiple candles outside of that zone extending and stretching away from where the Bollinger Bands are. However, you can see that there's very much a chance of it coming back up and putting itself in a position where it's able to maintain that and not break that 95% rule, as you can see here with it tracing towards the downside. Then it came back up, it wicked up and touched the Bollinger Band bar again, like it had done in all of these previous hours. Then the prices moved up and into the actual Bollinger Band zone again here, and had a higher low overall, and then it moved towards the median line thereafter, and then you can ask other questions. Now there's another, so that's how you use it, that's how you use it properly, not how you use it badly. Great, covered that section 20 minutes in. The last video I made was better than this one by a big chunk. Anyway, and sideways, and then the other thing that people like to talk about is the sideways price action and seeing the squeeze come on. Now, I tend to have the ADX on the chart down below, and the DMI, the directional movement indicator index, right? Here on this one, using a 14 and a 14. That's just out of the box settings at the minute that I'm using, and I have the ADX on here, and the ADX here is a measure of sort of strength of trend, or indeed, when it comes down below a certain area, then you could look towards the possibility of volatility coming back in, because it's gone so low. Now, if we look towards these areas where it goes sideways and it gets squeezed, and we take out a measuring stick and we say, right, so this area here is where it was tightest, okay, it's wider the whole way along before the move actually happens, and it was wider all the way back there. So this is where it was tightest here, and we compare this to the ADX down below, and instead, so let's just give this some more breathing room here in the charts. And we're looking up here, another flash of the last video was better, and then we're looking up here, it was up above 50, it came down by over half, in terms of the strength of the trend, and it came down towards that 20 area. Here's at the 20 area, then it's moving on down further, and then here the Bollinger Bands are moving, as we go below this sort of this 20 area is where we're getting the tightest squeeze in the Bollinger Bands. Then it moves up slightly, but it stays below 20, just the same period as this is expanding, but they continue to expand as the ADX line comes back down again. And when it went back down below that 15, subscribers know that I talk about 15 and 10 are the two key areas in terms of the ADX line when you're looking for that increase in volatility. When it came back down below 15 here, then you're thinking, well, look, there's more chance, the volatility will come back in here. in a way that pops. Whereas this is expanding out the way and not giving you quite the same sort of idea in terms of the squeeze on the bands of the Bollinger Bands. Now that's just one example, so let's find another. Over here, in fact, let's get rid of this line here before I film a video in the future and think, why have I got that? Over here, looking at this price action, so we've got a squeeze on the go. They're getting tighter and tighter and tighter. This is where it's tightest, just here. Of course, then there is a movement in the volatility thereafter. Let's take a look at the ADX coming down here. 36 comes down below the 20 area over here. So, you know, again, like this is wide. The ADX was below 13 over here. In fact, let's start off then when it was below 15. So 20 goes down below 15 just here. In terms of this is where the squeeze is kind of coming in with the Bollinger Bands. But to say that this is that they're getting to be able to base any trades off the back of this, pretty tough, I would have thought. Whereas kind of just simply saying, look, this has actually come down below 15, and it's dropping down, and it's going towards 10. Oh my goodness, you know, we could see something happening soon. Would be better. It happened, cool. Then it went up above 20 again, as this was wide, whatever. So they're both kind of like whatever. Then at this point here, you're looking, and it's getting tighter and tighter and tighter. This is the tightest point just here. What have we got on the go just here? The ADX comes below 20 at this point here, where the Bollinger Bands actually suddenly snap from being wide to being thin again. So this shows you a progression. This doesn't really give you that same feeling, as it just kind of is. I mean, maybe it does, depend on what sort of person you are, visual person or whatever. But to me, this smooth line of the ADX coming down here is better than this it's better than Casper, the friendly ghost in the background over there. Then anyway, we come and we're squeezing some more, but you know, overall doesn't really give you much of an indication of anything. Then we come down below 15. Over here, experienced some wild volatility during this period where the prices went up to 9,800, then actually up to as far, you know, at 9,900, then down to 9,500, flicking around all over the place here in the space of a couple of hours. That there, you know, it's gone below 15, so you could have been like, hey, something might happen soon. This is just started to get squeezed, so we've only spent a wee while here with it squeezed. I don't know which one of those two serves more utility. For me, it's the ADX. Then coming over here, this is where it's tightest, and where it's tightest over here again, it's just dropping back down below 15, and we're moving down the way. This is expanding out the way though. Pardon me, I've got indigestion today. And we come outside of here. Now, the utility of the Bollinger Bands kicks back in again when you can say, look, there's a 95% chance that we're not going to get another candle just here, which squeezes up and continues to push away, far away outside of the realms of the standard deviation from the 20 simple moving average. Cool. But we're looking at this and saying, right, well, compared to the ADX down here, it's below 15, and it comes down towards lower and lower and lower, and actually comes down below 10, you know, over this point here, where the Bollinger Bands are kind of getting wider. If you make the comparison between when they were tighter to just this zone here, I mean, this is twice as big, you know, and then over here is really big as well. It does get as tight as that again at that point, but that's actually in the you know, this candle here is right. We've got this down below 10 on the ADX. We know this is happening during this period of volatility. How useful do I find the squeezes on the Bollinger Bands? Not very useful. That's the sum up there on that one, right? Just so that you know, but that's another use case for the Bollinger Bands. So, why am I talking about the Bollinger Bands? Well, let's just take a minute to go over to the comments here and go through them. So we'll just say hi to everybody that's commented recently. This is yesterday's Bitcoin video. Really appreciate it. You might enjoy watching it if you haven't done already. I love Paolo Nutini, insane voice. Cheers for the great video. You know, some people love Paolo Nutini so much that they eat him straight out of the jar. Lol. I actually, my ex-girlfriend was good friends with his ex-girlfriend, I think, or else current girlfriend, maybe current girlfriend. I never actually met the guy though. Whatever, who cares? No problemo, my good paleo. Pierre said, "Good morning, Rocky. Great video. Stock to flow drives hopium and keeps people believing in the long-term value of a product for hodlers to hold. Indeed, I replied to that and said, exactly. It's that sort of thing which some people look to when they're awaiting a liquidation on their account, thinking, but science says up. You might want to go back and watch yesterday's video if you haven't. We're getting a squeeze in the Bollinger Band. What value do you put into that? Well, I've just spent a wee while answering that question. But, you know, TradeSpot came along and gave a good answer, by the way, as well. First off, the first good answer he gave is that, did you know that the Bollinger Bands were first developed as a dieting device, but after the deal fell through, JB sold them as an indicator? That's what I heard anyway. And I heard that too, actually. Yeah, he did. He did. You had the jiggle you. And then, of course, that was a bit of a fad, so instead he used it in technical analysis. But in serial, they have only been squeezed this much when we were about to pop off out of one range into another, and it's nearly always been a lower one. Maybe Rocky will give us some Bollinger Bands business this week. Well, I'm doing that today, fellas. Lol, 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 good one, haha. But for cereals, just to keep the serious cereals joke going. Yes, you're right. It's not much of a surprise, but from looking at the last couple of months, somewhat sideways. Maybe I'll stick them on soon, but overall, them being tight was to be expected. Sure, it's to be expected, right? Have I not kind of covered that already? And I look at the 21 EMA in every video. 21 EMA, you know, the median line is the 20 moving average. It's kind of up to you. I find the 21 EMA to be slightly more useful than the 20 moving average, but there's times when it's been quite useful. I covered them in the better video, which I didn't have me in, but you can't do everything perfect every time. The Bolly moving average is 20, so they're never far apart. You could think of that as being an analog. Don't expect there to be much to learn from seeing the Bollies. They probably come in and around the levels I'm looking at anyway. We will see. I'll stick them on instead of the VR in the next day or two. Other great comments. So that's the thrust of this episode. Thanks so much to King 1367 for having put that comment on there. A couple of great comments though that I'll get through here in a second. Greedy Rocky uses all the words Bayleaf, my arse, funny stuff. It was Basil Lynn. Anyway, great comment, Lynn. Hey, come on, I didn't use all the words. I definitely left some words out there for other folk to use, like Jabberwocky and telekinesis. See, plenty of words left. Lol, lol, lol. Aha. Lynn comes back with an even better reply. And Prestidigitation and Egypt and Massey Ferguson. Though that's a brand name. Keep up the good work. Prestidigitation, fucking doorbell. Have to go. Right, look, I have to go. I'll be back in a minute. Let's just see. I might not use, or I might use this video when I come back. But the current price is 9,029. So obviously, that was good crack with us looking at the Bollinger Band, at the price action outside of this area. Came back up. What did we do in this period here? We wicked up, we touched it. We're currently outside of this area. 95% chance that we won't actually remain here. And instead, we'll come back up and touch where the Bollinger Band is right now. So I'll tune back in with you later on. We can see the Bollinger Band sat there at 9,050. Should we at least get a wick up towards that period during this hour? Maybe we will. Maybe you'll get some value out of learning this lesson. In terms of learning lessons from it being squeezed, I don't see any value, particularly talking about that. Really, to be perfectly frank with you, if I just want to sum it up instead of going on for ages about stuff, I'll come back and tune in with you in a bit whenever I've said hello to my guest. Jeez, I wish that first video had worked out. I'm going to hit pause. And we are back. So, I honestly can't remember now if the part of the video that I filmed earlier on is any good or not. All I know is that I left off and the prices were somewhere around here, and we're asking the question, will we come back up then and touch off this Bollinger Band? And it's now 9,074, and as we can see on the price action, that it quite clearly has done exactly that. So at this point then, in terms of how you'd be using the Bollinger Bands, you'd be saying to yourself, well, will this continue towards the downside, and will we trace it down as we go, and will this expand and all the rest of it, or will we find ourselves back within this and moving towards the median line, whether that's sideways or up exactly towards it or whatever? And generally what we'll be looking at for that will be when the next part of the Bollinger Band actually has appeared on the chart, where the price action is in relation to that, if it's within it, such as over here and moved more into it, and then it was absolutely within the area of the Bollinger Band and moving towards the median line, or will it then retrace out towards the outside and back towards the actual outer band itself, or not? Okay, so right, so actually now, okay, so I'm going to have to try and think, what was I talking about earlier on? And the problem here is exacerbated quite a bit by me having made a video earlier and now it being later and me not knowing exactly what. There's 2 minutes and 45 seconds left, so you can work out now, I suppose, how long it's been since I was filming. And and I can't remember. I've kind of, smushed the two previous videos, the half I'd made and the one I'd made before without me being recorded in it, and together. So I can't remember what I've talked about and what I've not talked about and whatever else. Oh my God, what a mess. Will this video be any good in the end or not? I don't really know. And I feel like I wouldn't have just said cheerio if there wasn't stuff that was meant to be talked about, but I can't remember what I have and haven't talked about. So I suppose real quick then, let's get off the hourly chart and instead try and take a look just for the next 2 minutes at how the other charts are turning up. So there's 2 minutes left on the 2 hour chart as well. So we'll take a look at that one. And see where we are here. So we came outside of this territory, now we're back towards it as well. It's just at the same sort of price points as where the 1 hour one is. On the terms of the 4 hour, we only really kind of wicked outside of it, and then during this 4 hour we moved right outside of it, then came back into this area. So there's that, and that's putting us right at the edge of where we find the parallel channel. Now, as ever in these videos, I always say that I draw these things in fairly softly. I'm not actually particularly concerned about the exact dollar value of whatever line it is. Bearing in mind as well that this is sloping towards the top side and that we've been talking about 90.50 for quite a while as well as being an area. So the prices are above 90.50 as we speak. They're below that 9,100 target, or not target, well, whatever level. Actually, let's go down to the 5 minutes and see how the prices have been since I've not been here. So what's actually happened? Well, it's essentially just gone up towards the top side, having come right outside of the Bollinger Bands down here, then up towards the top, and then on again. So I'm going to guess that I must have been filming this some point in this period here or so. Then I said cheerio, and then I've rejoined the prices now here, and they've only really gone up. Came up towards 90.50, went down towards 9,000 again, then up towards 9,071. Right. Well, okay, so what was the comment anyway? The comment was about we're getting a squeeze on the Bollinger Band. What value do you put in that? So I'll just kind of re-answer that again in a second, I suppose, or answer it for the first time. Not quite sure if I've answered that properly or not. But I can't go away without having said prestidigitation. I can't go away without having said prestidigitation. Prestidigitation. Yeah, prestidigitation. Yeah. That's the word. Prestidigitation. Because that's a great word, prestidigitation. My goodness. And what it means is, smoke and mirrors and magic and all that sort of stuff. And that's really kind of what, I think in a way, Lynn McDowell, you kind of deserve to have the Gold Star Award for possibly the best comment of the week in terms of esoteric words and whatnot. So I want to throw out a massive thank you for that comment. Prestidigitation is a great word, very much underused. And Egypt, well, that's another great word. And yeah, of course, I have to agree with that one too. Massey Ferguson. Now they're a brand of tractor, are they not, or something like that? Farming equipment. Yeah, tractor. Let me just have a wee quick look and see about the old probably Massey Ferguson because it's got two S's in there. Massey Fergusons. Oh, look at that. Wow. So that one without the cab on it. Yeah, that's great. I've seen one of these kicking around. I'm pretty sure I have. Up north in Scotland. Another great one that I actually liked from back in the day is Lamborghini. If you want to have a Moon Lamborghini, do you know that Lamborghini actually, while this is what we all know Lamborghinis for, Lambos, if you want to be an original Lamborghini type person, then you're going to want to have the Lamborghini tractor, of course, like this. Now this is where it's at. If you've got the money, and you want to be, a cool dude and all that, and Bitcoin goes to the moon or whatever, then buy yourself one of these and kick about in it. When people ask you if they want to see your Lambo and you show them one of these, then you'll definitely be impressed, right? These are great. This old Lamborghini, that logo there, Lamborghini. I'm pretty sure this is what Lamborghini must have started off like making this sort of crap here before they went onto the sports cars or whatever. So anyway, so I just thought I'd share that with people for the chat. Bitcoins and awful teas, isn't it just? Good tune, best music of the last 50 years has come from Scotland. Woo, Scotland's the best. Stock to flow is the biggest waste of time I've seen in crypto. I like your take on it. Cheers very much for that comment, by the way. And I don't know if I've said thanks yet to Mustafa. Hi, Rocky. I see all 500 videos of you. You're the best. I have one question about FBTC. Why do you not say anything about FBTC? Only speak about FUSD. Thanks. You're great, funny, and thanks for all the time spent on the videos. Massively appreciate that comment. Massively. Thank you so much, like I say here. And yes. So why not then? Let's take a quick look at Ethereum versus the old Bitcoins. Where do I have it kicking about here on my favorites list? Where is it? Where is it? Where is it? Where is it? ETH, GBP, ETH, USD, BTC, GBP. Do I not have it on there? God, wasting more time in this video scrolling up and down my favorites list. Okay, let's do this then. Ethereum BTC. I surely would have wanted to have had that on my favorite, so let's stick that on there and go over and take a look and see how things are doing on this one. Now, I dislike the Bollinger Bands in general, by the way, just so people know. Look over here towards the 24-hour time frame, see if we can see anything of note. Having this sort of stuff on the charts I just think is ugly and primarily not that useful. But I've already explained to people how to use these things as well. Like, so, just remember if you were looking at this and thinking it was oversold at this point here or overbought or whatever, and that you were going to then expect return towards the median line and whatever else, that the prices of this actually went up a full sort of 40%, tracing up the line. So that's what you really want to look for. Likewise, again, here coming down towards this area, and if you were to use this and say again that you were using it in that Investopedia way and say now it's going down towards the downside, the prices actually went down 20% the whole time, where maybe you were trying to get a trade at that point and seeing them tracing it. And if you look across, if you just look at the Bollinger Bands, now that you're aware of that concept, which isn't necessarily said it hasn't been said to you anywhere before, you actually see this happen in so many times, as I just point at these areas on the charts where it's kind of happened in the past, and it's what you'd be looking for instead. Now you know how to use the Bollinger Bands, okay? Now you know how to use them, looking at all this, instead of doing it like it says over here in Investopedia. So I can't remember if I filmed this in this video or not, but I'm going to just do this again if I haven't. What do Bollinger Bands tell you? Bollinger Bands are a highly popular technique. Many traders believe the closer the prices move to the upper band, the more overbought the market, and the closer the prices move towards the lower band, the more oversold the market. I think I've done a pretty good job throughout this video and just there now explaining to you how that's a really naive and incorrect way of using the Bollinger Bands. And of course, many traders think that, but many traders, the vast majority of traders go bust, and that's not how you use these things. And maybe I should have a standalone video explaining how to use the Bollinger Bands. Maybe that would be something that people would actually benefit from, because I see this mistake happening constantly. And as with regards to your question, which I really do appreciate, by the way, we're getting a squeeze on the Bollinger Band. What value do you put in that? I hope in this one I've answered this referring to the ADX. I think I have probably, and talking about where the ADX is in relation to when these squeezes happen on the Bollinger Bands. You can see there's a squeeze happening overall here on this one, and at the same time the ADX has gone up towards that 20 and then down towards lower than 15 and down towards the 10. When I talk about crypto and the ADX, I like to look towards the 15 area and saying when it's below there you can anticipate some volatility coming into the market. When it was last time close to this area here on the 28th of May down, then we saw the volatility coming in here, and as we see it over here again, it's just continuing to get towards the lower side here. I can expect there to be an increase in the volatility soon, and that's kind of what you'd be looking for, the squeeze of the Bollinger Bands. The squeeze is a central concept of Bollinger Bands. Now, I would completely disagree with that, but of course that's what the question is about and whatever else. So when the bands come closer together, constricting the moving average is called a squeeze. A squeeze signals a period of low volatility and is considered by traders to be a potential sign of future increased volatility and possible trading opportunities. Now, that's just an analog for what you're already seeing with your eyes. This sideways price action is then precipitated this squeeze here on the Bollinger Bands, and then you'd think that there'll be a return to volatility. Like I said here, pointing at the ADX, you can do the same thing there, as I've so often done in videos in the past, and I think that's probably a better actual use case for this, for something, and it's better on your charts and it's not so ugly. And this here can also be seen just by the naked eye and looking at the price action anyway, really. And you don't need to have those the basis line being a 20 moving average. You don't need to have that on the charts either, and all that sort of stuff. Also, the first part about the oversold overbought part, that's complete bollocks, and as well the second part about the squeeze, well, that's mostly bollocks as well. And I think I maybe can demonstrate that better by looking at the Bitcoin prices and that as well. But let's just look back the way and make a comparison. Like here, when the squeeze started happening and there was this volatility then came into the market before actually we saw this sort of divergence in the increase in space. So we had it going from 0.018 down to 0.017, then up to 0.019, and all that in this period when the squeeze happened. So you could say, oh, there's going to be some volatility, but it only happened within those areas. And looking at this instead and seeing the ADX coming down towards this 20, well, actually, no, this is probably a good example of it. Oh, God, this video, my word. Anyway, this is actually better in terms of the Bollinger Bands are better on the Ethereum Bitcoin pairing than they are on the Bitcoin USD or probably indeed the Ethereum USD pairing. Really, what else can we see here looking at this thing, this price action? I never really talk about it much. What can we see? I hate the Bollinger Bands being on there. They're just fucking ugly. Excuse my language. Actually, how is the current price of Bitcoin doing? What would happen if I made a different video now? 9040. I can't do that. I can't do that. I can't realistically do that. Right, just continue on with Ethereum stuff. Go away. Right, so sideways, is there any patterns here to be aware of? Not really, it doesn't look like head and shoulders or anything like that. Looking over to the left, you can see that this is where the high is. In fact, this is very, not dissimilar to really the situation that we're looking at with regards to Bitcoin anyway, with the previous price action. In terms of Bitcoin pairing, you're looking at 10,200, 10,500 and whatnot, and around those areas. And that's what we're looking at here with the Ethereum Bitcoin pairing as well. Ethereum, Bitcoin terms. Let's look at the weekly and the monthly. In fact, for this one, the monthly, we've had 3 upward rising months, 4 in fact, and that's part of this trend. It's been higher low since over here. So we've actually had a low here, a high, kind of a low here, a high here, a higher low here, a higher high here, a higher low here. So that can make things quite simple, really, in terms of the monthly. We're looking for that 0.025 level to get to for this one to move towards the top side. Looking at this, you can see that we're kind of in the weekly time frame. We've got a symmetrical triangle on the go. Possibly, or an ascending triangle from this area here, but that's kind of it's just a symmetrical triangle, really. Draw this in so we've got it on the charts. Subscribers know that I draw these things in sloppily because that's how we roll. They're subjective. You can choose your own use for this. What do we want it to have it like? From here, going down the way like this, just for the crack, I think is how I'm going to put this in. So that looks like it's kind of breaking towards the top side, so we'll have to adjust that. And then there. So okay, so we've got this symmetrical triangle on the go. We could be looking at this having been completed already, but I've just shallowed it out and stretched it to the side, so it looks like it's not really got to that stage yet. In terms of the distance into this thing, we are 31. There's the entire thing's 31 bars. We're 20 in, so we're 2/3 of the way. So we're not quite there yet, but soon enough we could break out. So if we did move above this line here, that could be your first sign of things happening. But of course, looking at this at the 25 area, that's where we need to see the prices moving up above. In terms of the weekly time frame, to start saying this is the minimum you'd expect in terms of a move here, or the maximum. No, this is just fake out territory still. Really looking at this thing, I'm going to have to look over towards the previous high over here at 22.7, 0.027, and if we were to just take a measured move off the back of this symmetrical triangle, stick it over here, and say it were to break out towards the top side, you can't do the full way up. That's just too much, but somewhere between 30 and that height. So if we did actually manage to make up towards that height, we could expect the prices to go on towards 0.03, and that would be very healthy for the prices having moved up. What percentage of that? That's more like 20%. Yeah, 20%. So we would have moved up 20% there if we did that off the back of this symmetrical triangle. That would be interesting to see. That could happen at any time now, really, between now and, well, of course, the future. Let's go down to time frames. That's what we like to do on the channel, I suppose. 2-day time frame here. Symmetrical triangle still visible on that one. Still the same sort of a dealio. Everything's exactly the same. What about divergences? This here is a higher low. Is it lower here on this? Ever so slightly. So we had a little touch of hidden bullish divergence there on this one. That's good to see. What about on the stochastics here between these two? No, it's not. And on the DMI, well, these two, that's the positive, but this is the negative here, and then that, so that's not. So then we've got this bullish aspect of things. How's that going? Well, nothing really. I suppose you could say that this is higher, and this over here it's not higher. That's So between these two highs here, if you were looking at this as being an uptrend, then you would say that was bearishly divergent, but it's not an uptrend because we've not got higher price action, so that doesn't count. So yeah, really overall, Overall, I'm just going to have to revisit this in the future. I mean, you can quite clearly see this symmetrical triangle basis for this thing as being an issue in terms of being able to make predictions about the price action or anything like that sort of stuff. But looking towards 26, and 27, 25, 26, 27, really, that's not really saying all that much, but that's what we're looking at here across the different time frames in terms of a move for this one. Let's go down to the 4-hour time frame and see how this is. We can see our symmetrical triangle is actually back on the charts again now, which is kind of handy. And we're towards the top side. Do we ever get a higher high in here? I don't think that looks like it got a close in above it, does it? Here, closed higher than here, which means that that's bearishly divergent because this is higher than it is in the past, but the RSI is lower. Same with the stochastics, same with the DMI. If you're looking back on this time frame that far, that's maybe a bit much to look that far back though. What about this? This general area is pure sideways. Yeah, well, I mean, we're going to have we've got really low volatility on the Bitcoin pairing. We've Bitcoin to dollars. We've got the same sort of scenario actually on the Ethereum pair, and we've got the same sort of setup here. Then showing out that we've got this sideways price action during this period of lower volatility. We could break out of this, and if we did, then those are the targets towards the top side. Towards the downside, 2263, 020. 020, yeah, so 020. Where's this line coming in at? 21. So 21, but then I would look here as well at this middle part here. It seems like a quite significant area looking back the way. So anywhere in around that 23 area would be a potential area for it to turn around at. But it'd be going down lower than that. Would this be like a head and shoulders on this time frame? Not really, but it could be. I mean, if this were to actually function as a shoulder and this to be a shoulder here, head here, if this were to happen here, and here as that, then you could look towards this area as your neckline here with the 24s. You could take a measure move off the back of this thing, going down the way towards these areas down below, like 23, where we had in a second ago, but you'd really be looking towards that actually at 23,500. That would be a significant area, of course. So I'd probably anticipate the prices were to be turning around if they come back down here and slam down the way at 23,600, I suppose, or so. I hope that's decent for you. This video's got to be too long. It's not right. I should really make a new one, but we're going to publish it anyway or else I'll decide what I'm doing after when I'm editing it. I don't know. I'm going to go on and make the Ethereum Chainlink and Tezos videos now. Decide after when I'm editing it or something. I don't know. I don't know. Look, things just went wrong for me today, right? But there's a lot of information out there, and I hope that helps somewhat. Let's just, before we tune in, since we spent so long and we were looking for the close here, we're looking for the close here. How did we do? 4 hour, we're still an hour and 44 minutes in the 4 hour. Geez, really went on for ages there when I meant to come back to the 1 hour. Got 45 minutes left on this one. Where are the bollies at then? Let's stick them back on here. We're just in that area. Zooming right in, we only came up to there. We're now doji dancing on the cusp of this thing, or just here actually. We're moving back inside it. Okay, so where's the middle line of this thing coming in at? Well, it's coming in at about 9,200. Then you have 9,160 there, where the 200 simple is, and 21 EMA. I could look towards those two areas there, rather than actually the median line itself, in terms of where you could expect the prices to possibly, not expect, but where you might think in terms of low risk trading, having managed to take a trade in these 8,900 areas up towards that 9,160 area, and not be particularly greedy about things, and looking at a decent 2.5%, perhaps 2.5% to 3% move there. That's all right. That's a decent enough move. All the rest of it, good stuff. Right, fair enough. Let's move on then and publish this godforsaken video. Thanks so much for tuning in. Really do appreciate it. Let's move on. Maybe I'll come back to this and do another one. Who knows?